Welcome back to the Malaysia Money Matters show. It's the 9th of May, 2025. Let's dive straight into what's happening with Malaysian companies and how it all affects you.
Okay, let's start with the central bank. Bank Negara Malaysia, BNM, they've kept the overnight policy rate, the OPR, steady at 3%.
Still 3%.
Yep, for the 12th meeting in a row, actually, since May 2023.
Wow. So what's the signal there? Confidence.
It suggests they're, reasonably confident about our current growth and inflation outlook. But they did acknowledge rising downside risks.
Risks like?
Mostly global stuff, trade tensions, geopolitical uncertainties, the usual suspects affecting growth.
Right. Okay, so OPR unchanged. But then they did something else, didn't they? Something surprising with the SRR.
That's right. A big move, actually. They slashed the statutory reserve requirement ratio, the SRR, by 100 basis points, down to 1%.
9%. That sounds low.
It's the lowest in 14 years. It takes effect May 16th.
And just remind us, the SRR is the cash banks have to hold.
Exactly. So cutting it like this, well, it releases a lot of money. Around RM19 billion, actually, into the banking system.
19 billion? So why do that now?
The main goal seems to be boosting liquidity, making sure there's enough cash flowing amidst all the financial market volatility, and hopefully supporting lending.
Okay, makes sense. But they're saying it's not a policy change.
Yeah, BNM was quite clear on that. They said this SRR cut is not a signal about their monetary policy stance. That's still indicated by the OPR. This is purely about liquidity management.
Got it. A technical adjustment, not a directional shift.
Precisely.
And speaking of reserves, how are our international reserves looking?
They saw a slight increase. As of April 30th, they stood at US $118.7 billion.
And is that considered healthy?
Yeah, it's pretty solid. It's enough to cover about 5 months of imports, and it's nearly 0.9 times our total short-term external debt. So a decent buffer.
Okay, good. Let's shift to corporate news. HLIB Hong Leong Investment Bank seems to expect a bit of a slowdown for some companies in the first quarter.
Yeah, specifically for mechanical and electrical, or M&E companies, they're flagging potentially softer earnings.
Why is that?
Lower billings, mostly, and also some seasonal factors like, the holiday period slowing things down. Cable manufacturers, though, they expect to be stable.
But HLIB isn't negative overall on the sector.
No, not at all. They're actually still quite positive on the power infrastructure space long term.
Because of?
Well, things like Tenaga National's capital spending, big investments needed for data centers, that's a growing area, and also development in East Malaysia.
Right. Any specific companies they like?
Their top picks right now are MN Holdings and Southern Cable. So maybe some short-term bumps for M&E, but the underlying power theme looks strong.
Okay. Now, Kerjaya Prospek seems to be doing well on contracts.
They do. They just secured another one, RM162 million for a big service department project, 47 stories down in Johor Bahru.
That's quite a win. How does that fit into their targets?
It pushes their year-to-date wins up to over RM870 million. So they're well on their way to hitting their RM 1.6 billion target for the year.
And their order book.
Looking healthy. This brings their total outstanding order book to RM 4.6 billion. Plus, it's their first contract in Johor this year, which is interesting.
Mm-hmm. Lottie Chemical Titan also has some big news. A long-term deal in Indonesia.
Yes, a 10-year ethylene supply agreement with PT Asahimas Chemical. It's valued at over RM 743.5 million.
That's substantial. When does that kick in?
It's tied to the completion of their new petrochemical plant over there, which should be ready in the second half of 2025. That plant's massive, by the way, 1 million tons of ethylene capacity per year.
So a future revenue stream. Good timing, maybe.
Yeah.
Weren't they reporting losses?
They were. This news comes after their 8th straight quarterly loss. The loss did narrow year on year, but still a loss. So yeah, this long-term deal could be really important for turning things around.
Indonesia seems to be a focus. Cita Global is also looking there.
That's right. They're exploring possibilities in East Java, specifically in telecom and renewable energy.
How are they approaching that?
Through an agreement with a major local organization, PWMJT, they're looking at potentially piloting around 250 telecom towers and maybe 5 megawatts of solar energy at institutions run by PWMJT.
Early stages, then.
Yeah. Feasibility studies are set to start within 6 months, but it signals a potential entry into the Indonesian market for them.
Okay, back to Malaysia. Petronas Gas is involved in a new power plant project.
Yes, in Labuan. They're partnering with 2 Sabah state government-linked companies to develop a 120-megawatt power plant.
Is this happening soon?
It's a longer-term project. The target for commercial operation is January 1st, 2028. Petronas Gas will hold the majority stake, 60%,
Right.
in the joint venture, which is called Rancha Power.
Right. Now, for REIT investors, Pavilion REIT had some positive news.
Yes, their first quarter net property income was up 5%.
Driven by.
Mostly higher rental income from Pavilion Bukit Jalil and also Elite Pavilion Mall. Seems occupancy and rental rates have improved there.
So things are looking up for them.
They seem optimistic. They mentioned good consumer spending and also the upcoming acquisition of 2 hotels as supporting factors.
Good news for public bank shareholders, too, it seems. Dividends are going up.
They've announced they're raising the dividend payout ratio target to 60% of net profit for 2025. That's up from 57% last year.
So higher returns. Subject to approvals, I guess.
Yes, subject to regulatory approval. They also clarified they have no current plans for share buybacks or issuing new shares.
And they addressed the founder's family share sale.
They did. They mentioned the gradual stake sale by the late founder's family is ongoing, and they're trying to manage it to minimize any impact on the share price.
Okay. Let's talk about SD Guthrie. Seen mixed views from analysts.
A bit, yeah. RHB Investment Bank has a buy call. They're expecting output to improve in the second half of the year, the peak season.
But not everyone agrees.
Public Investment Bank is more neutral. They're a bit cautious because crude palm oil prices have dipped recently.
So short-term caution versus longer-term potential.
Kind of. RHB sees potential from things like land monetization and their renewables push too. So yeah, different views on the immediate outlook.
And finally, on the company side, big news from Perodua, an EV.
Yes, this is quite exciting. They're aiming to start producing their first electric vehicle by October.
October this year.
That's the plan, and launch it by the end of the year.
Wow. Any idea on the price point?
They're targeting below RM80,000. That's key. Focus is on affordability.
That could really shake things up. Local production.
Yes, locally assembled, starting with over 30% local content, aiming to get that over 60%. They're targeting younger buyers, small families, and really emphasizing battery quality and resale value, trying to tackle those common EV concerns.
Definitely one to watch. Okay, let's broaden our view now to the international stage. U.S.-China trade tensions still simmering.
Oh, definitely. China's basically reiterated its demand for the U.S. to scrap the existing tariffs before the next round of talks. Treasury Secretary Scott Bessent is meeting Vice Premier He Lifeng in Switzerland soon.
So China drawing a line in the sand. What's the U.S. response?
Well, President Trump stated he's not willing to lower tariffs on China just to jumpstart the talks.
Doesn't sound like quick progress is likely then.
No, it suggests a potentially tough, drawn-out negotiation process. Both sides seem pretty dug in right now.
And it's not just China. The EU is getting involved, too.
Yes, the European Commission has proposed potential countermeasures, retaliatory tariffs, essentially.
On U.S. goods, how much are we talking?
Up to $95 billion worth of U.S. imports, potentially. Things like wine, fish, aircraft, cars, a wide range. This is if negotiations fail to get the U.S. to remove its tariffs on European cars and other goods.
So a potential escalation there, too. This could widen significantly.
It really could. It highlights the risk of these disputes spreading.
And Malaysia is caught in the middle of this tariff situation, too, especially with aerospace.
We are. Malaysia is actively seeking tariff relief from the U.S., particularly for our maintenance, repair, and overhaul MRO sector.
Why MRO specifically?
It's a key industry for us, and there's a recognition that these U.S. tariffs could hurt both Malaysian and U.S. aerospace companies that rely on our services. So negotiations are happening to protect its competitiveness.
Interesting. Now, across the pond, the Bank of England actually cut interest rates.
They did, a quarter-point cut down to 4.25%. And interestingly, they specifically cited the impact of U.S. tariffs on U.K. growth as a factor.
Really? U.S. tariffs impacting U.K. rates?
That's what they indicated. It was a split vote, though, showing some disagreement internally. But yeah, it reflects serious concerns about the global economic uncertainty caused by these trade policies. They also hinted more gradual cuts might follow.
Adding to those concerns, the investment firm PIMCO issued a warning about the U.S. economy.
Yes, a pretty stark one. They said U.S. recession risks are at their highest in years.
And they linked it to tariffs as well.
Partly, yes. They mentioned President Trump's resolve to restore steep tariffs as a contributing factor to that increased risk. More uncertainty for markets.
Now, what's the U.S. Federal Reserve saying? Is Chair Powell echoing these worries?
Powell indicated the Fed isn't in a rush to change interest rates, but he did warn that, sustained large tariff hikes could lead to higher inflation, slower growth, and more unemployment in the U.S.
So the Fed is watching and waiting.
Pretty much. They'll remain patient and monitor the impact of trade policies before making any moves on rates.
Okay, let's switch to oil. OPEC's output dipped slightly.
Yeah, just edged a bit lower in April, surprisingly. They had actually planned an increase as part of easing the earlier cuts,
So why the dip?
mainly due to lower supply from Venezuela, plus smaller drops in Iraq and Libya. It suggests some members are struggling to ramp up production as planned.
What does that mean for prices?
It could offer some support to oil prices, if supply isn't increasing as expected. We did see prices tick up about 1% recently, partly on hopes for some progress in those U.S.-China trade talks. Market sentiment is definitely linked there.
Now, this next one seems quite significant, especially for tech. The U.S. is planning to change some rules on AI chip exports.
This is a really interesting development. The Trump administration is planning to rescind some of the Biden-era restrictions, specifically something called the AI diffusion rule.
Rescind them, so easing the rules.
It appears so, for some aspects at least. It seems part of a broader rethink of semiconductor trade rules. The idea might be to simplify things and focus more on direct talks with countries like the UAE and Saudi Arabia about chip access.
But what about the restrictions targeting China?
Those are expected to remain in place. This seems more about adjusting the rules for other countries.
And how has the market reacted here?
Positively, especially tech stocks. We saw NationGate and others gain on this news. It shows how sensitive our market is to global chip policies.
And Malaysia's official stance?
Malaysia has welcomed the move to revisit the rules. The government emphasized the need for clarity and consistency, which is crucial for our tech sector.
So potentially good news for Malaysia's semiconductor industry.
Potentially, yes. It could remove some uncertainty. The Ministry of Investment, Trade and Industry, MITI, is actively talking with the U.S. about this.
Okay. And just briefly, on the geopolitical front, Presidents Putin and Xi met again.
They did, in Moscow. They emphasized the strengthening Russia-China alliance and their shared interest in what they call a more multipolar world order.
Reinforcing that alignment.
Exactly. It highlights their positioning relative to the U.S.-led global order.
So looking back at everything we've discussed today, what stands out as the most, let's say, dynamic or potentially impactful news?
For me, it's got to be that planned change to the U.S. AI chip export rule.
Yeah, I was thinking the same. Why specifically?
Well, for Malaysia, it's quite significant. Rolling back that AI diffusion rule, even partially, removes some immediate clouds of uncertainty hanging over chip exports to various countries, potentially including ours.
In the idea of direct negotiations.
That's the other key part. If the U.S. moves towards negotiating chip access directly with nations, that could open up new opportunities for Malaysia. But it also means we'll need to be proactive, actively engaging to secure terms that benefit our growing tech sector.
And the market reaction confirms its importance.
Absolutely. Seeing tech stocks like NationGate jump immediately just underscores how tuned in the Malaysian market is to these global semiconductor policies. If clear, consistent rules emerge from this review, it really could be a catalyst for more growth in our tech industry.
Definitely something we'll keep a close eye on. Well, that brings us to the end of this quick dive into today's key financial and economic news.
We hope breaking it down like this has given you some valuable insights.
Remember to subscribe to the Malaysia Money Matters podcast for more in-depth analysis and updates like this. We'll be back soon with another deep dive. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.